3-minute trader tip: the importance of trading volume. Logically, it makes sense to start with asking the question, well, what does volume tell you? Well, many traders believe that combined with price action, it may be a leading indicator of either buying or selling pressure. Most indicators are lagging in that they are based on what's happened previously, not what's happening right now, and that's why the use of volume is popular with many. Logically, higher volume associated with a green candle would suggest buyers are in control, as that buy-in pressure is evident. Logically also, if there's higher volume associated with a red or bullish candle, this would suggest that the sellers are in control. And obviously, in either case, there's a chance to go long or short. Conversely, if we look at lower volume associated with a price move, this suggests a lack of conviction in market participants in whichever direction the price is moving. So that's the theoretical basis on what many people use volume for. So, if buying or selling pressure along with a move in price is evident, this could influence the possibility or probability of the continuation of initial move at the start of a trend. So, for example, a breakout trade to the upside or downside, or a trend reversal strategy opportunity. It could also potentially indicate the probability of a continuation in price direction after a trend pause. We've talked before about a trend continuation strategy. Having increased trading volume as part of that continuation of a price move would appear to be logical. Remember, of course, we're always looking to increase the probability or increase the likelihood of a trade continuing in our desired direction once its initial criteria have been met. Of course, whatever we're going to do, we need to plant a flag in making sure that we've articulated it within our plan. We religiously trade and, of course, measure your approach versus the alternative. And this creates a little challenge. If we have to be that specific, we need to start to think about defining the price action that reinforces that buying or selling pressure. So, for example, a candle close in the top or bottom third, depending on whether we're going long or short. So it may look like a bullish candle closing in the top third with increased volume as part of our entry criteria, or vice versa for short. And what volume measure are we going to use? Are we going to use it from the previous bar or combination of bars? So, for example, simply larger volume than the previous bar or larger volume than the last 3 bars? Or are we going to work out some way of defining average volume and whether it's above or below average volume in terms of whether that buying or selling pressure exists? These are your challenges, and you need to get that specific within your plan. Because as we've said, the more specific you can be, the more consistent you can be in your action, and the more likely it is ultimately you're going to be able to find the right trading setups for you as an individual trader. Trade safe, and we'll see you again soon. Bye bye for now.